All right. Okay. So let's look at the S&P. We always like to look at the S&P to start with. We had in June, we had these lows. As we were climbing a wall of worry, everyone was saying, oh, the June 17th lows. We're still hovering around those June 17th lows now, give or take a few percent. For the last week, we're basically flat to down maybe 1% or 0.5%. So it seemed like a very volatile week, but in the end, we just went up and went back down. The interesting thing that happened this week was the UK bond market. The UK pound went down compared to the dollar, and the Fed over there at the Bank of England intervened and started buying bonds. That's like a QE scenario. So that was like an emergency. That was like the Fed stepping in COVID times. So that was a major event that happened, and that's why we had this spike in the middle of the week here, this spike right there. The reason why was people were not excited, but why the market went up was if there is some kind of problem with U.S. Treasury rates, or maybe the 10-year or the 2-year of the United States, if something happens in the United States, the Fed might jump in and do some quantitative easing too. So there was just this small amount of speculation for that. But the current gyrations of this week is getting into currency wars. I don't understand any of this, and it has a big effect on our investments because right now the dollar is going up in value. There's something called the DXY. It's the dollar index DXY. It's a way to track the dollar. And rats. Okay, so over time, what made the United States, since 2018, what made a lot of the companies in America competitive is the dollar was going down for quite a long time, and most recently it's gone up 20%. And whenever you have companies that are making money overseas, they make less money. So the company makes all of their profits overseas. With the depreciation of the dollar, that means all their profits are like maybe 20% less because of, or depending on the currency of the market. But if the dollar, it seems like this currency wars is a bigger issue than we initially thought it was. I don't understand it, and it's going to come up here and there during our talk today, but a lot of companies are warning. Like Nike had a warning, partially due to currency translation. And we were saying way back whenever Target gave a warning about inventories, we said that was a canary in the coal mine. So we expected other companies to continue to have problems with inventory. And Nike had problems with inventory, so they had to sell at discounted prices to get rid of a lot of their inventory. So also we had, remember Target had, what other problems we had? Let's look at this. Nike stock plunges as investors trip all over that inventory. So we have some themes that are going to be coming up in all the reports as we get into the third quarter reporting season. Inventory is going up in a lot of companies like Walmart, Target. They have to give discounts in order to sell their merchandise. They don't make as much money. And A lot of companies are selling less in China, and that's due to the COVID lockdown in China, partially. Strong dollar. So companies like Nike that have a big presence overseas are taking a big hit because of the dollar. Now the good thing about that is when the dollar starts decreasing in relative to other currencies, U.S. Companies will do well that have a lot of business overseas. So we're gonna mark this as, well, this is going to be a theme for a lot of the companies. We know that some of the tech companies like Google and Facebook, they don't have inventories, a whole lot of inventory. So they're not going to be giving these warnings about inventory, but they're going to probably say something about China, missing some China sales, and the strong dollar affecting their earnings. So this currency situation is, it could evolve into something like a black swan event that people are saying. Like if the Bank of England, the pound started going down like it was, and there wasn't an intervention, that could be like a global crisis. So, and what do? You already have 20 crisis situations in the world. Right. Had to get that off my chest. So here we are in October. Last day of September, we're in a situation where every chart in our stochastics charts are pointing down. You can see, for the most part, most indexes, most stocks are pointing down. We have some little bit of strength in healthcare, maybe utilities and consumer staples. These are a little safer. Utilities are safe, and right now utilities are basically at the bottom of their range here. All right, but for the most part, we have stocks that are in a downtrend. So when the whole market is in a downtrend, you basically need some kind of catalyst to get us out of this, and that catalyst is the Fed saying we're done raising interest rates, and that will allow people to plan, and maybe the housing market might come back at that time, and we can predict when we're going to have a stability. But right now, it seems like lower lows, lower highs is what's happening for most of the stocks and most of the indexes. So, and what do you do in something like that? Like Chuck was saying, you kind of watch it. Right now, it's not fun putting money in for the long side. But if you're not invested at all, Jim Cramer says you got a dollar cost, because you never know when that bottom will be. Okay, so let's look at some of our talking points. Right now, the current yield isn't really, the current 2-year Treasury yield isn't going anywhere from last week. The Fed is reducing its balance sheet by $92 billion a month, and there's a 1-to-1 correlation to the amount that they're reducing to the amount that's going up in the yields for the treasuries. So until the Fed reduces its balance sheet to where it's not reducing anymore, that's one big thing that will make give the market some support, and that'll help the treasury yields, and that'll help the tech stocks. But it's going to be a while before that happens. All right, so SP is down, either flat to down. It seemed worse than it was. It went up a lot, it went down a lot, and then when the dust settles, we're basically break even. So a couple things for Nike had some pretty scary warnings about inventory, and they're not making as much, so the margins, they had to put things on sale. So that's going to be a theme for retail. So most of the stocks we're following aren't retail, but for those involved with retail, maybe Apple could be considered one of those. You're going to have these same issues. Okay, now, all right. Let me see. Hurricane. There was a hurricane in this week, and they're saying that will reduce GDP by 0.75%. Okay, so that's like a that's another indication that we're going to have a recession, because if the hurricane we have a problem with hurricanes, then that reduces the GDP, and that kind of is what the people that are making the recession calls. They'll look at those numbers. So what else is happening here?
Well, the hurricane, one question I had about the hurricane, and that is, we've had all this slowdown in construction. I assume there's going to be a lot of rebuilding over the next few years, it sounds like, in Florida.
Yeah, I guess so, yeah. There'd be a lot of Home Depot would be... I wonder what the correlation is between Home Depot and major hurricanes.
So the lumber futures haven't started going up yet, but I was wondering if they might go back up again if there's demand for lumber down there.
Right. So it does have an effect on, the stock market. And even in oil, usually oil spikes because refiners have to shut down during a hurricane. But that didn't happen. We didn't see that happening in the oil.
So the oil refinery, I don't know how many are on that west coast there, how much impact there was.
Yeah, it's usually around Texas.
It wasn't clear to me, that was going to impact much oil refinery capacity. I don't know.
There were some government officials that were saying, don't use this hurricane as a reason to raise the price of oil because we're watching you.
The president said that. That's President.
Oh, that's what he said? Okay,
President Biden said that. Yeah, that was President Biden.
So that makes sense because, there's, if you shut down refineries, then you have a lack of supply of, so that would definitely raise the price. But like he was saying, there's no reason for it to go up. Things are getting pretty dicey in Russia right now, where they're annexing. They're officially making an annexation notice, and I don't know. It's not, doesn't seem like it's moving towards a resolution over there. So that's not going to help the market. So one thing we'll find I just took a glance at top 10 are going up and down, and this is becoming super important. The stocks that are going down the most are the ones that are in debt. They have borrowed money during the pandemic, and they're now facing higher interest rates to refinance. And everyone knows that. The more rates go up, the harder it is for them to refinance. Let's look at that right now. Okay, here we go. Market movers. Look at the ones going down the most. We've been talking about Carnival and Norwegian Cruise Line seemingly forever as the poster childs of the COVID panic. So they had to shut down for a year, and they acquired all kind of debt in order to survive. And that's right now what's happening is as interest rates go up, people that own it understand that they're going to have problems paying that back. So let's look at almost every one of these. Royal Caribbean. It could be that the Florida has a lot of. Maybe that's it. Some of the cruise lines are shut down during the hurricane season, so maybe they just can't run their boats at this time. That could affect their earnings too. So that hurricane is having a lot. Look what's going up. Matthew Weyerhaeuser. That's a lumber stock. It's up 3%. So people are getting that idea to start buying wood, and there's going to be some rebuilding down there. Let me see what else. Generac. Whenever there's hurricanes, there's also a lack of power. So so that people get scared and they start putting generators in the back of their house. So that could be why Generac is up. Let's see. Okay, that's all we can get from the top. Okay, Charles River Laboratories. I think they do testing for drug companies. Like they do. If you had a drug and you wanted to find out if it was safe, you would kind of you would offload a certain amount of patients to them to do some tests on blood or something like that. So that is kind of a stable environment, stable business in this environment because you still have. We were saying the drug stocks are kind of a stable demand in good times and bad. And let me see, what other ones are doing bad? I don't know what the news on AbbVie is. Philip Morris is down.
So I have an answer for your Carnival drop, and that's that they reported earnings before market, and they were not good. They're saying they need to raise prices. So, and they yeah. So.
Oh wow. So Carnival, maybe Norwegian didn't. A lot of times companies go down together in the same sector. So Carnival released their earnings. Norwegian, both of these are they're on the verge of going bankrupt because they have to borrow so much. And if they have, bad earnings and they have to raise prices unless people are, then you have geopolitical tensions and who wants to go to Europe now when there's a war. It's a bad situation. I would stay away from that sector in general. It's not as stable as drug companies like we were just talking about. Nike was down for their earnings. They posted all it. We'll go over that later on. You see, JB Hunt. They do logistics for truck driving. They manage a truck driving network. You see, Clorox is down. Could be some earnings reports I didn't know about. Maybe that's why they're going down lots. Let's look at the NASDAQ. Okay. Okay, Datadog, that's one of our high PE ratio stocks. I wonder why it's going up. There's some news I just didn't get. Marriott, Nitrogen, Zscaler. Okay, so we have CrowdStrike. We have some companies with you see, Zscaler. What is the category of CrowdStrike? Antivirus companies. They must have been. Sometimes when there's a hack or there's a well-known problem, like an infiltration of a company, all the related virus companies go up. Lululemon is down a lot. They're example of they've been a high PE ratio stock. Let's see what other stocks are going down. Skyworks, they make parts. They're one of the biggest customers is Apple. So whenever Apple had news yesterday or the day before about potential slowdown in orders for iPhone 14, everyone who puts things into the iPhone goes down with that. So they're still in the process of going down. Skyworks has a high PE ratio too. So, okay, that's all we can garner from that. Let's look at the Dow, see what the best. Oh, there it is. Matthew, we just made that connection. Home Depot is up probably because that hurricane has people have to rebuild you see United Health. Okay, so we have health. Walgreens is health related. Was Merck? Is it Merck, J&J, drug companies? Okay, so it's more of a turn to a conservative companies to pay dividends today. And the ones that are going down, Nike with the earnings, Boeing, Procter & Gamble. Don't see any real connection for all those. Okay, they're not going down a whole lot. All right, so let's go to our meeting notes. All right, we go over the S&P yet? We started going over it. Okay, so looks like we have a flat day to down day today. Flat day. Let's look at the S&P chart going back over time. Okay, so right now we try to look at past levels for an idea of where the support is. If we're in a free fall, in a situation where we have some kind of black swan happen, we have to go back and see prior levels of support to see when it will stop and start going up again. And we have the COVID lows, and that's probably the lowest it'll go. If we go down in this downtrend. Let me see. So I did mark those out in a different way. But we are totally oversold, and doesn't mean we can actually be more oversold than this. But Jim Cramer says we're down to like negative 13 and negative 17 this week in the S&P oscillator. He trusts that as a means of oversold ranking of the market. All right, so let me see. We got our talking points there. Okay, crude is basically, let's see what the crude is right now, because that changes pretty often here. Hold on. Okay, it's 80 right now, and that's that's right where it was. No, last week it was 85, so it's actually going down. So, or it's unchanged. Well, it went down from last week. All right, so so in a recession, oil is going to go down, so we know that. Treasury is flat, unchanged since last week, and we're going to keep our eye now. We're starting to watch the U.S. dollar index because the dollar has been going up in value, and the higher it goes, the harder it is for big companies that are multinationals to meet their estimates. So, so next week we'll have like a comparison. Is it going up or down? Okay, let's look at the sector ETFs. We know home building might be, or not home building, but stocks related to the hurricane damage. Let's see if that utility sector, consumer staples. Okay, let's look at the ones going up the most. Miners, telecom, banking, energy, biotech. Okay, those are the ones going in oil. It's oil services. Home construction. Okay, home builders. We were thinking this, if a hurricane wipes out houses, you're going to have to, there's a higher demand for housing. So, one's doing the worst, utilities, consumer staples, technology, okay, and healthcare. All right, so we're at a flat day, so we're not going, and we have a flat week. So, and what do you do in an environment like this? Well, you have to look to make sure we're right in front of a month that's traditionally good. We have a good month. Let's go back to our monthly chart. This is one of the best months of the year. Top 3 or top 4. So we expect pretty good things from this month because we have earnings towards the end of the month to help. And the months that have the worst performance don't have earnings to look forward to. So, so we do have earnings starting to come out again in October, and then we have earnings coming out in January. So at every 3 months we have quarterly earnings. 4 months. performance. Yeah. All right. So, all right. Let's look at. Okay. So we were looking at these levels of support last week, and we basically are holding at these June 17th lows. Right now we're flat. So I said I think Wednesday, let's hope this level holds. But in reality, we're in a downtrend. Even though we have, even though we have support going back to June 17th, that doesn't mean we don't continue this downtrend. So you can see we're making lower highs, lower lows. The next stop, if we rally, it's going to be up to here. Then we could very well go back down to here. And the time when we start going up and make an uptrend in the stock market very well may be the day that the Fed says we're done raising rates. Maybe because there are people that study this, and they say 3 months after the end of a recession is whenever the stock market recovers. And we're just trying to figure that out. All right, now let's look at. Okay, we're going to keep our eyes on this U.S. dollar index. Right now, it's been appreciating. It's a tailwind. No, it's a headwind for stocks now. But if it starts going down, it'll be a tailwind, and it'll help all the major stocks that we're following that are overseas related. Okay, I drew out these lines and the numbers that go along with them for major support in the market. So right now we're kind of holding at this 366 level in the S&P. The next level we had some overhead resistance there, and what resistance becomes support, and now that will be the next level of support if we go down. Stocks could get cheaper from here, we don't know, but for me, I'm like a long-term investor. I'm holding throughout all this. So let me see, we have 323, 364, and 222 after that. All right, so a big news story this week is Apple went down 5%, I think, yesterday. And there are these people that do channel checks, and they kind of predict, how good things are selling. And so Bank of America says that they had a downgrade on the stock. So that made it go down 5%. But they, what I do is a lot of times whenever stocks go down a lot, the CFRA has little notes about the stock, whether if it's still good or not. And they said the parabolic move in the U.S. dollar is causing problems. But this is a good example of a compounding stock that over time will be good to buy and hold. So I think, let me see, let's look at this. All right. Okay, let's look at our fear and greed index. We're at extreme fear now. And this is the time when people get afraid and they start buying protection. There's more put buying now than most times of the year. And people are selling. And just at that time is the best time to buy usually. So you have to think opposite of what everyone else is. And last week it was just fear, right on 28, right here. But we dropped a lot in a week. But even today, we're at the levels we were last week. So let me see. So we're very volatile. We have a very volatile environment. The VIX is up. And let's look at the VIX just because it's a good thing to look at. Here it is. Okay, so the VIX is right around 30. So if you look at the market bottoms, the times that we're really afraid and stocks are selling off, the VIX is basically at the 30, right where it is right now, the 30 to 35 level. And so it's another indication that, people are selling, and that's the time. If you're not invested, it's more of a time to buy than it is to sell. So it's going down a little bit today, primarily because it's not going down as much as it was yesterday. And people, you see. All right, so let's look at next little thing. All right. Okay, we're still looking at this. We learned a really good lesson with this Fed putting money into the market and taking money out. So we're going to keep looking at this until we see the Fed doing a quantitative easing. No, a quantitative sending money into the market. Then we know we're in another bull market. But right now we're just we don't know how far this is going to go down. It's going to make some companies go out of business because they have to borrow money at higher rates. Hold on for a second. Could you hold on for 1 second? Is there a way to call back in like an hour? Hi, could you call back in an hour? I'm in a meeting now. Thank you. Sorry about that. Okay, so now, all right. So whenever things are going good, it's hard to look at this and say, well, is that ever going to happen? But right now, we just don't know how far this is going to go down. And as the Fed reduces the balance sheet, which is what we're doing here, we're normalizing. It makes the interest rates go higher, and that makes it less profitable for businesses, and that makes stocks go down. We don't know how far it's going to go down. It's like a fool's errand to try to time that. But we do know that whenever the Fed says we're raising rates, or we're reducing rates, that's whenever we know that at least we have, we're not fighting the Fed. All right. So there's a lot of people on Twitter that are smart. They're talking about a possible. It's a very complex situation with the monetary exchange rates and a lot of Federal Reserves around the world. They're manipulating currencies for certain reasons, and there's another thing. It could be a black swan event. We don't know anything about this. I don't know anything about it, but you just have to be prepared and understand that currency-related things over time should work their way out. Like things that are bad now for American companies could be good whenever the currency's on our side. I don't know what's happening here, but it could be. What they're hinting at is the United States might lose control of the interest rates for their bonds and the treasuries. If that happens, that could be a major issue, and it could be one of those black swan events. So we'll keep our eyes on this in the treasury yield. Hopefully it stays down. You see. I wanted to say one thing regarding all this. China tells state banks to prepare for a massive dollar dump. Yuan buying spree. If there's China was one of the biggest buyers of the U.S. debt, and if they start not buying the U.S. debt or selling, that'll make the yields go up because it's supply and demand, and that could lead to a problem with, I don't understand what could happen there, but we're just bringing these things up. Okay, I think today the Fed preferred gauge says inflation accelerated even more than expected. So that is bad. That means the Fed will be holding rates higher for longer. And that's not good for our stocks going up. It's for stocks going down. So every day we get a new hint for inflation. This was a bad hint. Okay, so what?
You talked about China's holding of U.S. Treasuries. So China, I think, holds just around $1 trillion in U.S. Treasuries. They're not the biggest holder of foreign debt. I think that's Japan. And I think China's actually gone down a little bit. They've been buying less recently. But I think I've read some speculation they're going to let some of it roll off instead of selling. They'll just let it roll off and not buy as much.
Yeah. You got to figure how much of that is due to if China invades Taiwan, then they don't want any foreign reserves that can be frozen on them. I don't know. What if that's why they're doing that? And that's even $1 trillion. That's a good portion of the U.S. debt. And if they let that roll off and don't buy it back, that could make the United States pay a lot more for interest for their debt, and that could lead to a problem. I don't know.
Yeah. There are a lot of places with the economy's not doing very well. I think China, the economy is not doing very well right now. It's hard to get into real numbers. So.
All right, but that's like a how would you? Okay, that's you have to put that in a box and say I don't understand it. I'll do the best I can with what I understand.
I think don't buy Chinese equities.
Yeah.
It's the box that I think you should be.
Yeah, it could end up being China equities could be. They're already out of control for the last year we've been following it. Just think if we get in some kind of military conflict, what'll happen to those stocks? They'll be treated the same way as Russian stocks. I don't know. And look at Russian stocks. They're still zero or not even listed, So anyways, yeah. So a good lesson learned for all this is there's a war, going on between currencies and rules that companies have to follow. I think the safest things right now are United States-based companies, companies that do a majority of their, like Berkshire Hathaway, 90% more of their company is U.S. They make most of their money in the U.S. So that's an example. We don't have to worry about Berkshire Hathaway for this kind of news, but we just have to know this black swan is out there, and we'll just follow any hints that happen along the way. And if there is something actionable that eventually comes up, like for instance, well, I don't know what, but we'll keep our eye on it. It's becoming an issue, and it's affecting earnings. And when it starts affecting the earnings of the stocks we follow, we got to really understand a little better. All right. So what else are we going to talk about? Okay. So investors, what do you focus on? After this is September ended up being one of the worst months of the year. What was the worst month of the year? It was a really bad month. This guy's basically saying, don't be a hero. When they say that, you just don't put all your eggs in one basket. Don't buy it all at one time. Don't think that you can time, when a stock market's going to be bottoming or whatever. You have to basically dollar cost as much as possible if you have some money to invest. He said it really succinctly here. There are a lot of hard to quantify factors out there which are being compounded by the fact that liquidity is poor, financial conditions are tightening. So we have like this hodgepodge of events that we're bringing up now, this monetary fighting, we have war, we have all kind of inventory problems affecting, things that affects these companies. So the it's a really dicey environment right now. That's basically what he's saying. But you have to focus on earnings and about the quality of earnings. And, in 5 years, how long do you think it's going to take to get out of this whole mess we're in now with the Federal Reserve and, inflation? Matthew, you're pretty savvy with this. How long do you think it'll take to go back to a normalized state and not to have inflation anymore?
I really don't know. So I was kind of looking at big company PEs recently and trying to understand. So it was a few years ago that Apple was down at like 10, I think, which was, and people were saying, oh, it's a good deal, but they're also the biggest company in the world. I think that was a good time to buy. A lot of companies I feel like are in the like 18 to 26 range right now. So I think there could be more drops, but if you're looking to buy and hold for 10 years, I think there's a lot of good buys out there. There's a lot of good companies that are better prices than they've been for a while, but it seems like they could fall farther. Like, I don't know, is Coke at 26 or PE? I don't know. They'd have to get that earnings number back up, I guess.
Right.
So.
I think it'll take half a year to a year for everything to get normalized again. And if you think about each of the companies we're following, some are being like taken out in the back and shot and without really thinking the long-term potential of the company. So if we had Microsoft drop to $2 a share tomorrow, would you be ready to buy it? And then, so at some point in time that we're going to recover. Let's say 6 months to a year from now, most of the companies that are quality companies, big companies we're following, will go back to the growth rate they had before all this happened. So that's kind of what I'm looking at. Whenever I have Google on my chart, looking at it, it's still growing at 13%. Maybe for the next year, during a recessionary environment, they'll go up 0%. But if we get back to normal in a year, they'll resume their 13% increase in what they make. That's kind of what I'm thinking.
Yeah, and I think the price is going to go up before the economy turns around, right? And so if you're looking to I didn't sell a lot when we were going down. I'm not buying a lot right now. But I think that if you were looking, it's by the time things are looking better, I think the price is already going to be way back up on a lot of stocks.
Yeah, they say 3 months between the bottom of the recession and when the S&P recovers. So if we can somehow time it, and we know when the recession is going to be over, then we'll know the perfect time to start dollar costing. Okay, so we already talked about Nike. We talked about China. Let's see, we talked. Here's an interesting article from Morningstar. They were saying undervalued wide mode stocks to consider. They still see Meta as a undervalued stock.
It's at like 11 PE.
It's 11.
But it actually has a low PE.
They have a lot of problems in Meta right now. It's becoming obvious in a lot of their communications to the public. They don't say that they're going to be not meeting the earnings estimates, but they're cutting jobs. They're cutting projects that are important. It's just they're not in aggressive mode like they have been, and it just seems like they're not going to make their earnings. And on top of all this, TikTok is more popular than their platform for video, and they could be losing users. And if all that happens and they become uncool, and then they're not the platform of choice for social media, then they're not going to meet their earnings, and then that reduces. They're already at their growth rate. They have a PEG ratio of 1 now. but that PEG ratio still might be expensive if they don't make their earnings. And if they don't make their earnings, their PEG ratio could be 2 if the stock price stays the same.
Yeah, I don't think you're going to be undervalued unless you have serious questions about your future. Right?
Yeah. So okay, we got Teradyne. These are all wide moat stocks. If we go back to our they have a quantification. They have a number for wide moat. What they tell you either have a wide moat, a narrow moat, or a no moat. And wide moat in their terminology is very similar to companies that can raise prices in an inflationary environment. They have profits now, and they can do well in a raising rate environment because they have a certain amount of pricing power. They can raise the prices because they have like a monopoly in their situation. So these are some stocks they were looking at that have pricing power. Let's say Teradyne. I know it's these Lam Research. I don't know a whole lot about those two. Comcast, of course, we know they have a good network of internet service. You see, Equifax. There's only 3 major credit agencies, so that's why they have that moat. Boeing. No one else in America makes airplanes at their scale. They have Airbus as their competition. So.
The 737 MAX stuff seems like it's mostly behind them. They've been flying. I think they have a good record. I wonder, that's what I know. For a while, Boeing was really in trouble with. They were losing sales and stuff. And I don't know what the pandemic probably affected their sales too.
Yeah, I think that the pandemic really hit the stock, and at the same time they had problems with getting that plane certified. But what happened this week was they had a huge order from China. So China Airlines, I don't know if it's speculation or not, but they said they'd have a monster order for Boeing. So, but this is an example of a company that has no one else in America is going to be making an airplane company, at their scale.
But,
so
didn't China say that to put that on hold right now?
Oh, I didn't know that. Okay, but they went up a lot one day.
No, they did order, and then they're saying, "Hey, oops, just hold on, just put it on hold." And then they said, so I think what I heard last was like when Boeing asked, "Hey, can we get rid of your order?" So they said, "No, don't sell it to anyone else. We'll buy it, but just put it on hold." So everything is in limbo right now.
Well, you definitely have Well, for the sake of this article, yeah, they have that wide moat because only 2 companies really make these airplanes, and they just have to get their quality control under their belt, and then they're okay. But they're still trading at a higher multiple. Their PEG ratio is pretty high, so. So I don't know. They don't grow a whole lot either because, I don't know anything about this industry really to comment any more about it. But, so let me see. But the reason why we're looking at these undervalued wide moat stocks now is even if we had a drop of 50% or more, say if the S&P went down in half from here, these companies will still have their moat. They'll just be trading at a lower multiple, lower price to earnings ratio, lower PEG ratio. So sometimes quality companies that have like a monopoly, they'll go down with the market because every stock follows the S&P usually. So we're gonna keep watching this. Quality companies that are. They'll be the first to recover. Like Google, they were down. People were afraid people wouldn't spend as much for advertising during the pandemic. And, we were talking about it back then. We said, well, the Google probably to be the first to recover once everything was back to normal, because they already have their product in place. They knew they were growing 13% a year, prior to that. But for that one stretch of time during the COVID pandemic, 9 months, 7 months until the vaccine came out, they were flat to lower. And they went down a lot during the initial pandemic. So I like looking at things like Apple. They're only growing 7% a year, but that's a pretty consistent 7%. So if Apple corrects in a major way, we know at the end of this inflationary scare that these companies will eventually resume their 7% growth rate. But the next year, probably, we're going to have flat. We're going to have earnings warnings and companies not meeting their estimates. And for long term, you got to look at the companies do have the moat, and they can snap back whenever the rest of the economy snaps back. That's kind of what I was thinking. Let me see if there's anything else I had in mind here. All right. This week we're probably, I don't know, I debate, we're probably right here or right here. We're still in despair mode. And we basically hit a low back in July. We were saying everything's changed, we're back to normal, and then we're back down to this despair. No one wants to buy. Everyone's fearful. And it's only then when we start taking off and getting things back to normal. But we think 6 months before we start this takeoff and we start the new greed, enthusiasm mode. So right now we got to put up with this, and don't let yourself get too caught into the stock market's going down. I have to save everything that I have, because eventually you're going to want to buy things, and you're going to be greedy and delusional. So let me see. I think that's all I have for today. Is there anything anyone wanted to go over? I have 5 minutes. All right.
With the
Okay, I'm sorry.
I didn't realize I was on mute. With the regarding the inflation, I believe now Fed has to. They don't have to go aggressive every time if the inflation numbers go up. They have to. They have raised enough, but it has to come into the process and the system before everything starts showing the after effect. So they have to be patient as well. But I think either Fed have failed when they were supposed to study in their college, or but market is way ahead of them. So market is flat because now they know, okay, this is the end of September, they'll go back up. But my question is, my whole point is that once you have raised interest rate enough to everything to have an effect, it takes at least a quarter or so to get affected. Because when they increased in the beginning, it was just by 25 basis points, which was not enough back then. And that's why they didn't see the, it was not affecting anyone, by the way.
Right.
But now, with this raise of 0.75, in a month or two, you will start seeing the after effect of a lot of things, not just one. So because the housing market will drop and not drop, it will at least stabilize and drop a little bit. At least it will not be a seller market anymore after a month or two. But yeah, I think they have to. Now onwards, they should not be so aggressive compared to what they have been in last few months. The best bet was in the very beginning, in the start of March, where I wish they would have done by 0.75 or maybe 100 basis point, something like that, because but they were going by books. Like, oh no, when we do it, we just do it by 0.25. We don't go more than that. But sometimes you have to come out of the books as well.
Right.
But yeah, I think this you'll see a but also the another concern is the supply, right?
Mm-hmm.
Supply and demand, right? So even though the things come down, I hope the supply will start again,
Right.
from China
Yeah.
and
We'll
other
see.
countries. Yeah.
They say it takes 6 months from a Fed rate increase to hit the market to really work its way into the market. So that's kind of what I was thinking about. That 6 months to a year we'll be done with all this, but it'll take a while. And these companies, we're all in downtrends right now, every single stock. So we have to realize that you can't assume that this is going to be a super bottom. It could go down lower, but right now we're in this lower highs, lower lows, and until we break out of here with some really good news, like the Fed's done, we break out of each one of these channels. We're in a lower high, lower low environment until 6 months to a year. We're done with the inflation, done with the Fed, all that. So and then we have, there's some things we don't understand, and we just